All right, so we're diving deep today, folks, into the world of wealth building with Nick Meggiulli's Just Keep Buying.
Yeah.
I gotta say, some of this stuff was pretty eye-opening.
Oh, yeah, for sure. Like, you think you know this stuff, and then, bam, Maggiulli throws all this data at you,
Hmm.
you know? Really makes you rethink things.
Yeah, totally. Like, take that whole save 20% of your income thing. Not exactly realistic for everyone, is it?
Right. Tell me about it. Especially if you're not exactly bringing in the big bucks, like Maggiulli points out, you're already spending most of your income just to, like, survive.
So true. It's not as simple as cutting back on lattes, like some people say.
No way. It's more about figuring out how to make more money in the first place, which we'll get to. But first, I think we got to talk about this save, invest, continuum thing.
Oh, yeah, this was interesting, right? Like, where you are on the spectrum determines what you should be focusing on.
Exactly. Like, have you tried that calculation he gives? You compare your expected savings to your expected investment growth.
I haven't gotten around to that yet.
Well, it's pretty revealing. So let's say you're saving, what, $1,000 a month. That's $12,000 a year. But your investments are only giving you, like, maybe $1,000 in growth.
Huh, okay.
What that tells you is right now, your focus should be on maxing out those savings, before you even worry too much about, like, fancy investment strategies.
That makes a lot of sense. So it's not always about rushing to invest. It's about knowing where you stand and making the right move at the right time.
Exactly. And, Maggiulli even tells this funny story about this guy, Dennis, who tried to, like, outsmart Uber's surge pricing on New Year's Eve.
Oh, no. Did it work?
Well, let's just say he ended up with a $264 Uber bill.
Ouch. Talk about penny wise and pound
Yeah,
foolish, right?
totally. But his point is, like, sometimes your time and energy are better spent trying to, you know, boost your earning potential rather than obsessing over tiny savings.
For sure, for sure. So how do we do that? Boost that earning potential, I mean.
Well, Maggiulli has some ideas, some pretty practical ones, actually. Like, maybe you can sell your time, your skills,
Yeah.
maybe create a product, side hustle kind of thing.
Oh, yeah. Side hustles are huge these days, and they can be a great way to bring in some extra cash, for sure.
Totally. Or, good old-fashioned career advancement, climbing that ladder.
Right, right. Always a good option. It's about recognizing those opportunities and, like, going for it.
Absolutely. And look, I think it's important to remember, becoming a millionaire, it's not like this get-rich-quick scheme.
No magic formula.
Nope. It's about being consistent,
Mm.
putting in the work day after day, year after year.
Which is like the whole just keep buying philosophy, right? But hold on, it's not just about buying stocks, right?
Oh, definitely not. Maggiulli really encourages us to think broadly about investing. I mean, everyone's always talking about the stock market, but there's real estate, REITs. You could even invest in, like, your own products or, stuff like royalties.
Royalties, like what?
Yeah. He has this example about someone who bought the rights to Empire State of Mind, that Jay-Z song.
Wait, so someone owns part of that song?
Yeah. And they're making bank from it, too.
That's so cool. I mean, it's like owning a piece of pop culture, right?
Yeah.
But I gotta say, a lot of people might feel intimidated by all this investing stuff.
Yeah, I get it. It can feel overwhelming, but Maggiulli has this 2X rule that I think is really helpful. Basically, it's like, instead of depriving yourself, you align your spending with your values.
Right.
So, want to buy those fancy shoes? Go for it. But invest or donate the same amount.
Oh, I like that. So it's like you get to enjoy the things you want, but you're also like investing in yourself and your future.
Exactly. You're not just spending, you're making a conscious choice to balance enjoying life now with building wealth for later.
Okay, so we've talked about saving and some like unconventional investing options, but let's get down to brass tacks. Why invest at all? It can't just be about retirement, right?
Right, right. It's also about staying ahead of inflation, right? Having options,
Mhm.
building a financial cushion for the future you.
So like what if something unexpected happens?
Exactly. Or, like, as you get older, your ability to work, to earn money, it kind of declines naturally, right?
Sure, sure.
Investing is like you're building another type of capital, something that can keep generating income even when you're not working anymore.
Okay, that makes sense. It's like having a backup plan for your earning power or like a safety net.
Exactly. And, to explain compounding, he uses this analogy of a snowball rolling down a hill.
A snowball. Okay, I'm listening.
Imagine it's getting bigger as it rolls, picking up more snow, right?
Yeah.
Well, that's like your initial investment. It's gathering more returns, which then get reinvested to earn even more
The
returns.
snowball effect.
Exactly. And this just keeps building and building over time.
So the longer you stay invested, the more that snowball just keeps growing.
That's the power of it. It's why time is so crucial in investing. Even if you start small, if you're consistent, you can see really significant growth over the long run.
Okay, that makes sense. So what about like diversification? How does that play into all this?
Right. Well, think of it like this. You wouldn't put all your eggs in one basket, would you?
Nope.
Diversify is kind of like that. You're spreading your investments across different asset classes,
Mm-hmm.
you know, so you're not overly reliant on any one thing.
Right, right. So if one investment takes a hit, the others can kind of cushion the blow.
Exactly. It's about managing risk.
Okay, this is great. We've covered so much already. We debunked the 20% savings myth, talked about that save invest continuum, and even touched on some alternative investments. Who knew?
And that's just the tip of the iceberg. Next time, we'll dive into some of the, common investing myths and look at some strategies for building a portfolio that actually aligns with your goals.
All right, so we've talked about some of the basics. Now let's bust some myths. I feel like, everyone's always heard that story of like someone's uncle who made a killing in the stock market.
Oh, yeah. The stock picking myth? It's a
Mm.
classic. Maggiulli actually has this whole chapter dedicated to debunking it.
And he does it with like real data and stuff.
Hard numbers. He even tells this story about his friend Darren, who got
Yeah.
caught up in that whole GameStop thing.
Oh man, that was wild. Did he like make a bunch of money?
Um, Not exactly. Let's just say he learned a very expensive lesson about the dangers of, trying to time the market and all that.
Ouch. But I guess like isn't it possible to pick the right stock and like actually make a profit?
Sure, it's possible. But the problem is, you never really know, do you? Like, you might think you're a genius when a stock goes up, but
Mm.
was it skill? Or was it just dumb luck?
Right, right. It's hard to tell.
And the feedback loop is so long. You make a decision today, but it could be years before you see the results.
It's like you were saying earlier, investing is a marathon, not a sprint.
Totally. And then there's the whole myth of timing the market. Everyone wants to buy low, sell high, right? But no one has a crystal ball.
Maggiulli has that example about the Dow back in 1997, right?
Yeah. If you'd waited for a dip to buy more, you'd been sitting on the sidelines for like 12 years.
Mm.
Imagine all the potential gains you would have missed.
Wow, that's a long time. So is the key just to like ignore all the ups and downs and just invest consistently?
That's the beauty of the just keep buying approach. You ride the waves, you stay in the market for the long haul, let compounding do its thing.
It's like you said, that snowball effect.
Exactly. It's not about trying to time the market perfectly. It's about time in the market.
Okay, that makes a lot of sense. So how does dollar cost averaging fit into all this?
Well, dollar cost averaging is a great way to implement that just keep buying philosophy.
Hmm.
You invest a fixed amount at regular intervals no matter what the market's doing.
So you're not like dumping a ton of money in all at once. You're spreading it out over time.
Right, exactly. It helps to smooth out those market fluctuations.
Makes it less scary too.
Yeah, definitely. And it can really pay off in the long run.
Okay, so we've tackled stock picking and timing the market. Now, let's talk retirement. That's got to be on everyone's mind.
The big R word. Well, Maggiulli gets into the whole, when can I retire
Huh.
question and, how much money do you actually need?
Yeah, how do you figure that out?
He introduces this concept called the 4% rule. Have you heard of it?
Vaguely.
Basically, it suggests that you can safely withdraw 4% of your portfolio each year in retirement.
So like if I had $1 million saved, I could withdraw 40,000 the first year and so on.
That's the general idea, but of course, everyone's situation is different. Your actual withdrawal rate might need to be adjusted based on, your risk tolerance, how long you plan to live, all those factors.
Sure, sure. But it's a good starting point, right?
Absolutely. It gives you something to aim for. And he provides some calculations to help you figure out how much you'd need to save to reach that, magic number.
Okay, that's helpful. But what about the non-financial side of retirement?
Ah, yes, the emotional stuff. It's not just about the numbers. It's about figuring out what you're actually going to do with all that free time.
Because you hear those stories of people who retire and then they're bored out of their minds.
Exactly. Maggiulli has this funny anecdote about Kevin O'Leary from Shark Tank. He retired at 36, but then realized he was, totally miserable.
I guess work gives us a sense of purpose,
Totally. So it's crucial to think about what you want your retirement to look like what brings you joy, what keeps you engaged.
It's about designing a retirement that's not just financially secure, but also personally fulfilling, right?
Absolutely. And that brings us to, perhaps, the most valuable asset of all, time.
Time. Okay, I'm intrigued. We've been talking a lot about money, but how does time fit into the equation?
Well, think about it. You could always earn more money, right? But you can't earn more time. It's finite.
True, true.
And how you spend your time, it impacts everything. Your happiness, your relationships, and yes, even your finances.
Maggiulli uses that story about the mountain man to illustrate this, doesn't he?
Oh yeah, Dashraf Manji, the guy who spent 22 years carving a path through a mountain. What a legend.
That's some serious dedication. But how does that relate to, like, our money?
Well, it's a reminder that real change takes time. It's about having a long-term vision, being persistent, and focusing on those small, consistent actions that over time can lead to amazing results.
It's like that whole saying, Rome wasn't built in a day.
Exactly.
Yeah.
And Maggiulli talks about how our perception of time changes as we age. He compares it to being a growth stock versus a value stock.
Okay, I'm not sure I follow. What does that even mean?
Well, when we're young, we're all about growth, right? We're full of potential high expectations. But as we get older, we shift more towards value.
So it's not that we're less ambitious, it's just that our priorities change.
Exactly. It's about recognizing that there's value in every stage of life.
Okay, so we've covered a lot of ground, but one thing that really stuck with me was McGeely's take on market crashes. Like, most people totally freak out, right? But he actually sees them as a buying opportunity.
Yeah, he flips the script,
Yep.
Instead of asking, how long will it take to recover, he's asking, what's my expected return if I buy N now W?
It's a totally different way of looking at things.
Totally. He uses that, the 2020 crash, right?
Yeah.
Even if you thought it would take like 5 years for the market to bounce back, buying at the bottom still got you an 8% annualized return.
Which is actually pretty decent, historically speaking, right?
Exactly. And the crazy thing is, when the market's down like 50% or more, historically the returns afterward are even higher,
Like, how much higher?
sometimes upwards of 25%.
Wow. Okay, past performance doesn't guarantee future results, obviously, but still, that's pretty compelling.
It is. It's like, while everyone else is panicking, selling everything, that's when you got to be brave.
Be greedy when others are fearful, right?
Exactly. And McGill give you a whole framework for how to navigate those crashes. It's about understanding the potential upside and keeping that long-term perspective.
Okay, that makes sense. But what about FOMO? Like, I feel like a lot of people, they hold on to cash because they're waiting for the market to drop even further.
Oh, yeah. I get that. Like, trying to time that perfect bottom.
Yeah, yeah.
But McGill's data shows that more often than not, that just leads to underperformance. It's better to be consistently invested even if you miss a few dips here and there.
So just keep buying, even when things are looking kind of scary.
Pretty much. He's got a good saying for selling, too.
What's that?
Buy quickly, but sell slowly.
Interesting.
Really evaluate your investments, think about the tax implications, all that.
Yeah, don't make any rash decisions based on, like, short-term market noise.
Exactly. And speaking of taxes, he also gets into that whole Roth versus traditional IRA debate.
Oh, man, that's always a tough one.
Yeah, there's no easy answer there. It really depends on your individual situation, your tax rate now versus what you expect it to be in retirement.
So, like, if you think your tax rate will be higher in retirement, Roth might be better. But if you're planning to withdraw less in retirement, then maybe traditional makes more sense.
It's all about crunching the numbers and figuring out what works best for you.
Right, right. Okay, so we've talked a lot about the nuts and bolts of investing, but I thought it was really interesting how Maggiulli also delves into, like, the psychology of wealth.
Yeah, he tells that crazy story about Jack Whittaker, the lottery winner,
Oh, yeah, the guy who won, like, hundreds of millions.
and then lost it all.
Yeah, it's a sad story, really.
It just goes to show that, money doesn't automatically solve all your problems, right?
Doesn't buy happiness.
Nope. And Maggiulli also talks about this phenomenon of like, I'm not rich, they are.
Oh, yeah. Yeah, you're always comparing yourself to someone who has more.
Exactly. And it can make you feel inadequate even if you're doing pretty well yourself.
It's like no matter how much you have, there's always someone with more.
He points out that even billionaires don't always feel rich.
That's crazy. It's all relative, I guess.
It is. But I think it's a good reminder to, be grateful for what you have, appreciate how far you've come.
Yeah, focus on your own journey.
Exactly. If your net worth is above the global median, you're already in the top 10% worldwide.
Wow, I didn't realize that.
Perspective is everything.
Okay, so as we wrap up this deep dive into just keep buying, what are some key takeaways for our listeners?
I think the biggest thing is to focus on those long-term goals.
Mhm.
Don't get caught up in trying to get rich quick. Focus on building a solid foundation.
So increase your earning potential, save consistently, invest wisely.
And don't forget about time. It's your most valuable asset. Use it to create a life that's meaningful, a life that's aligned with your values.
It's not just about the money, it's about the life you build with it.
Couldn't have said it better myself. What about you, knowing what you know now? Is there anything you'd do differently?
Honestly, I think I would have started investing sooner
Yeah, that's a common one.
and maybe been a little bit more adventurous with my investments, taking some calculated risks.
Oh, learning process, right?
It is, it is. Well, there you have it, folks. A deep dive into Nick Maggiulli's Just Keep Buying. We hope you found it insightful, maybe even inspiring.
Remember, building wealth, it's a marathon, not a sprint. Figure out what wealth means to you, make a plan, and just keep buying.
And don't forget to share your thoughts with us on social media. Use hashtag #TheDeepDive. We'd love to hear from you. Until next time, keep learning, keep growing, and keep investing in yourself and your future.